Hello and welcome to your Daily Five. My name is Erin Swenlin from DecisionPoint.com, and I'm here to show you the five, well, I guess most important charts to me going into this week. I am very excited to show you lots of these. We had quite a show last week. I don't usually get to do an encore, but really enjoyed my time. If you would like to get even more of me, you can go to decisionpoint.com and check out our products. We have the DP Alert, which is going to give you pretty much all of the market overview. We cover Bitcoin, we cover oil, we cover bonds, we cover the market in general, and all of our indicators in the DP Alert. Decision Point Diamonds, that is going to give you 10 stock picks per week, including 3 ETFs on Wednesdays, because I do ETF Day. So if you'd like to check those out, we have a free 2-week trial. All you need to do is use coupon code DP trial and the number 2, and you will get 2 free weeks to try us out. All right, let's start with, well, the biggie. Let's look at the SPY daily 5-month chart. So what I was talking about last week was that the bull market started where the bull market was going to start. And we ended up getting the bull market starting. So textbook bull market has started, but in the context of a secular bear market. So you're going to see these really strong rallies. You could see a rally of even 30 to 40%. Not that I'm saying that's going to happen now, but you can still have those big rallies in the midst of a cyclical or a secular bear market. So we're looking overall at some more upside coming in, but overall we still see problems in the economy, as I think most do. So we're going to be looking for a turn back here eventually. But right now, I'm thinking we've got a pretty good look here. The only issue we have is that whether we saw kind of a blow off when we started this bull market once we got above that level right there at about 415. And, we did get the pullback on it, but 410 is holding as support currently. And it's a great place for a rebound. I think we're going to find out a lot more about this market in the next day or two when we see how it handles this rising trend and we see how it handles this support level. But this is a bearish rising wedge. And when you get a bullish conclusion to a bearish pattern, that's really, I consider that especially bullish. So we really have a nice setup. The PMO looks good. The RSI is positive above that net neutral 50. And the VIX has been pretty much staying above its moving average on our inverted scale. So it's seeing internal strength. I mean, there's just not any problems there, but of course there are problems. It can't be perfect. Let's look at our Swenlin trading oscillators in the ITBM and ITVN. So they decided to turn down on Friday. And so that was a little bit of a concern here. What's more of a concern, though, is the fact that we have these negative divergences. That's where you get a falling tops on your indicator and rising tops on price. And those are bad news. Typically, those lead to some downside. We had a little bit of a difference back here at the beginning of November. We had these negative divergences, and they didn't play out with a big decline like the following one did. They ended up with a little bit of consolidation and a move back up. I think that that's entirely possible right now. The overhead resistance level to keep an eye on, though, is this 425, 430 area. But looking at the overall picture, ITBM, ITVM are still rising here, although, well, I take that back. The ITBM turned down, but we don't have the negative divergence here on the ITBM. And we kind of have a barely there negative divergence on the ITBM. So I think that we're still going to be looking at a move upward in the market. And, a little bit of chop along the way, which is kind of what we're getting used to in the market since 2020, really. Let's look at the Golden Cross and Silver Cross Index, because I think these are going to give us some real insight into what's actually going on under the surface here, because there are a few mixed messages on those charts I showed you earlier. But I don't think there are too many mixed messages on our bias chart, our silver and golden cross chart. So what we're looking at is the silver cross index, golden cross index. These are exclusive indicators of ours. Most are familiar with the golden cross 50, 200-day EMA positive crossover. And that the golden cross index then tells you within the index itself, the SPY in this case, the SPX, the SP 500. So we're determining how many stocks within have a golden cross where their 50-day EMA is above their 200-day EMA. We're counting them up. And right now we can see there are 60% with their 50 above their 200. That's good news. That's a bullish configuration. That's what we want to see. So majority of the market, almost 2/3, with a bullish configuration. Silver cross index. Silver crosses are 20 and 50-day EMA crossovers. So when the 20 crosses above the 50, that's a silver cross. So on the silver cross index, we're counting up all of the silver crosses within the S&P 500. And as you can see, we have almost 80% with a 20 above their 50. All of that is good news. I do see the silver cross tipping over on Friday, which is a bit of a problem, but we see a little bit of twitch along the way. So I'm gonna let it be, but it does worry me because it is coming in overbought territory. But underneath the surface even further, if you dig down, again, you've got rising on the Golden Cross Index, but notice that stock price above 20, 50, and 200 among all of the members is still pretty healthy. And yes, we lost a little ground on Friday, but not a lot of ground. So lots of mixed messages. But when I look under the surface and I see the Golden and Silver Cross sitting at readings that are this high, and I see this many stocks above their 20, 50, and 200, I feel pretty good about the market. I think we're going to we have to expect that chop, though. It would be nice. Energy's demise, XLE. So energy has really been having some problems. And what I wanted to show you here was those under the surface indicators on energy and why we're so concerned. First of all, PMO negative crossover. I'm sure the MACD has done the same. RSI is in negative territory. And you can see stochastics are now below 20. In fact, they're reading at 9, which is really terrible. So a relative strength, you can see right here in that thumbnail, relative strength has been trailing off for energy. I don't think we need to see a relative strength line to know that, but in any case, energy is not doing well. Notice that silver cross index here. It is turned over and is falling very quickly. It is now at about 61%. Golden Cross Index is still holding strong at about 91%. But look at the massacre under the surface. You have only 17% of stocks above their 20-day EMA. This sector was enjoying 100% readings for a little while, and certainly readings in the 90s and 80s for some time. And now they have just fallen off the planet. We now have only 21, 22% of stocks above their 50. Really bad news as well. You can see under the surface, even price is getting below even some of the 200-day EMAs. But this is a big problem for energy. And as part of that, I am looking to profit, of course, off of anything, including energy's demise. And there are a couple ways to do that. But first, before we leave, this is the price pattern. I didn't even talk about it, but we have a large double top. And if we get a breakdown to confirm this pattern right at about these lows, then we know that the minimum downside expectation would take price all the way down to about 72.50. So we have more downside that is certainly available to us. So let's look at something that might help us benefit from a loss in energy. And I don't usually do the leveraged ETFs, but this is one of the better ones, and it suits and fits my bill. But there is also another ultra short on energy itself, and it is called ERY. So, like my name, Erin, ER, and then it's Y. And that is an ultra short of energy. But I've been looking at an ultra short of oil and gas. I gave out this pick last Wednesday for my Decision Point Diamond subscribers on ETF Day. But this is going to take advantage of the problems in energy. It is a hedge. It is a leveraged ETF, meaning it is 2 times what energy is going to do to the downside. If energy is down 1%, then this is going to be up 2%. So you have to keep that in mind. It's not for your main investment. It is to hedge your current bets, if you will. So you can see now on this chart, we have the double bottom. So we're looking for that move up to, in this case, $14, and a breakout above would then give us the confirmation of the pattern, and we would look for a move up to about $18. That would be a pretty nice profit to enjoy, or certainly a good hedge. Now, like I said, leverage, so you're going to have to deal with a little bit of heartburn, have the Tums nearby, because you're going to see that volatility, and it might be a problem for you in particular. So think about that through. But you can see RSI positive, the PMO on a buy signal, and stochastics above 80. Everything looks pretty good. It looks like we're going to get that confirmation and a nice move. I'm expecting oil and gas to continue lower, which means this particular ETF will do well. All right, that is all I have for you today on your Daily 5. I have enjoyed being with you here. Go check us out on decisionpoint.com and get that free 2-week trial. Thanks for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.